Hello guys, glad to have you on board again. Today we're going to talk about the SPX and trying to make some intraday forecast. But first we're going to take a few minutes to cover up the global assets on a swing perspective, just to see if anything changes out there or has changed in between. So regarding the cryptocurrencies, absolutely nothing new, but still there is kind of a concerning information that just came out yesterday. Nothing you should really be fearing, but it's something I have to notice at some point. It's just that we created a stop breakout validated by yesterday's candle close, even though it doesn't really suggest the markets wants to break down. It's just that in terms of cycles, something seems to be not playing according to the plans, and obviously sideways algorithms have been detecting this and putting a breakout pattern in here, and the algorithms have detected that to be a possible stop hunting pattern. So what it basically means is that it's some kind of a little cloud on top of our heads for those who are playing with the speculative scenario. So I'm not going to change my mind just because of this. It's just, as I said, one cloud in the sky, which is just something I have to talk about, but not necessarily going to change anything about the ongoing plans. It's just this thing shows up, it shouldn't, and it could become a concern if for some reasons the market wanted to go down there, because it basically says just one thing: if we go here and if we break below, then it means we're still trending bearish, and that will be not a good sign, because trending bearish on a daily scenario, as we're trying to buy, and moreover buying with speculative trades, wouldn't be a good sign. It means clearly we'll have to invalidate if we go there and accelerate below that level, because stop hunting pattern basically says we could just go there, fuck up the stop losses in that area, and just go freaking bullish afterwards. Remember that those patterns says two things. The first one, if we reach out to those prices, we reach out for one reason, generally trying to take down stop losses. And it says another thing: if the price reverses out of those targets, then it means you can follow the reverse and put stop losses at that level, which means once the stop losses have been taken down, you will be safe to lock on your own stop losses at this area afterwards. Let me put that into words. Basically, if we do this, go there and reverse, then we'll be able to safely trade any fucking breakup that we'll have in that wave, putting a stop loss in here, because those stop losses will be the safest area to put as ever. So if we go there, it wouldn't necessarily be invalidation and the market is bearish, we're never ever going to go up again, whatever shit this is. It's just basically, it could be a bad news, short-term bad news, to take down stop losses, and obviously my speculative stop losses as well, because I'm not going to take the risk to maintain speculative positions if the market decides to take down stop losses. Now think about it for a second. What would I do that? It could be contradictory at some points, because yes, I tell you I still have strong bullish bias in that market, so why would I take down my stop losses with a loss if I still have a bullish bias? Just think about it for a second. Those who really get the answer are really getting to the point of what my strategy tries to teach you guys. I don't fucking know what the answer will be out of that area if we ever go there. First one, I don't even know if we're going to go there. But if we do, not necessarily going to be the end of the world. Because if we go there and make a positive reaction, I will even get stronger bullish bias, because I could be a lot more aggressive after taking down those stop losses and knowing that I can put mine safely in there and have a much more aggressive approach buying that market. Second option, we go there and we keep on going below that level. I don't know, $50, whatever shit this could be. If we do that, simply means that after trending all along, we're still bearish fucking trending, and I don't want that to happen. Because if that happens, simply means I don't want to be buying a bearish market that just go bearish forever. At least I will wait for further bullish information, but I just let go with the speculative trade. I'll still have my buy and hold. No worries about that, buy and fucking hold means, and I stand on this, I'm never ever gonna get the fuck out of here until this thing's worth either $0 or nothing, or a few dollars 2 years from now. But anything aside from that is just nothing I care about in the buy and hold perspective. But I decided to get into speculative trades, and those are the ones we're talking about right now. They might need some money management in the next few days if for some reasons we decide to go to that stop pattern. If we just reactivate bullish as expected, fuck up the resistance and activate the wave 3 kind of structure heading into the 200 area, then we're just freaking fine. That's all it is. So now let's put that in perspective. Now that I gave you the arguments, I'm just going to sum up those information. What am I basically going to do in such context? So you go 1 hour chart time frame, because this is where, and this is the time frame I decided to put myself ahead of when I decided to take that speculative entry. Okay, so this is the price I wanted. I caught the pullback in here for the reasons you know, but this is basically the signal I trade. In going and in between, nothing has freaking happened but just freaking noise to let the dumb traders talk. We've been building triangle, fucking it up by the upside, and then to the downside, taking down a lot of stop losses. We made a final outburst in here trying to take down stop losses. Some exchanges didn't do that. On the euro, we don't have that, so it's once again the usual stop hunting fucking thing, but whatever. So what we're having what we have now is another freaking compression. We're still building resistances and ascendants and rising supports. So another freaking invalidation no invalidation, hesitation structure. So we're just basically waiting for that freaking one to play its game as well. What's going to be the outcome? Who gives a shit? I don't know. I have no odds. The triangles are the worst structure ever to anticipate when they happen in ranges. When you go triangles in a range by itself, it just means that's the highest level of uncertainty as ever. So those who play that stupid game of anticipating which side the triangle will exit and when it will do this, I mean, oh gosh, you can really delete those guys from your followings because they're really as dumb as they could be, and clearly no traders. So we don't know. Now, on top of those information saying that we're at the highest level of uncertainty, let's use the fucking technicals from frameworks. Where are we trading right now? 50% trend channel, worst case scenario. 50% context channel, worst case scenario on top of that as well. So we clearly don't fucking know a damn thing about that market. Where is it going to go? It's the highest level of uncertainty. To me, it's a 50-50 game in here, and what I'm trying to profit out of in the market is when the odds are slightly shifting one way or another, and I'm going to try to profit from that. In here, I have absolutely no fucking clue. It really is. You want to take a bet, then throw a coin. It's exactly the same kind of thing. But you don't want to bet your life and your incomes out of throwing a coin each and every day. So obviously, if you want to make trading a job that will bring you day-to-day revenues, then obviously you don't want to throw a coin. You want to have decent odds and better odds to gain than losing in here. And to me, oh god damn it, I just can't do anything else than throwing a coin, which means I just do fucking nothing and I wait. If we go there, okay, I remind you that's what I've been telling you previously. We go there, we're making candle closes below the context, and we try to accelerate the context one more time. I'm fucking out of this, and I'm not going to stand there. It really means we're bearish trending, and I don't want to be there, and I don't want to even stand buying and risking myself getting to this area. So obviously this is where I get to trigger my stop losses if we fail, okay? But if we don't fall, what if we just go rising as expected, fucking the bearish context and reactivating bullish? Yes. Which side are we going to do? What are the odds? Go into the upside, go into the downside. Just as I said, throw a coin is exactly the same thing. So you don't do anything. If you're in position, you just do nothing. You wait for the market to pick a decision. If that's the right one, clap, 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 you're going to take money. If that's not the right one, if you're going on the opposite side, oh shit, you're going to take a tiny loss. But that's how it is when you speculate. We had pretty freaking decent odds when it was back then. The market decided to neutralize those odds and we're back to 50-50 game. Does that really mean you have to get out right now? You do have a choice. If you don't like throwing a coin, if you're low risk profile, you just get the fuck out. We're exactly trading the entry price. So you basically got in, you got out at the same price, and you don't take any risk. If you like risk, you just say, okay, you know what, I'm ready for throwing that coin. And future will tell. But this is basically a 50-50. If you play like that in the long run, you basically have no statistical advantage, which means you're not trading, you're gambling. So in here, I'll maintain that trade because I don't see no reason to invalidate, but I'd see no reason, no statistical advantage as well. So I wouldn't even trade those prices if I wasn't already in. So I'm in, I'll just wait because I like risk. So I'll take that risk, but I clearly know that the odds are 50-50, and if it goes to the wrong side, I won't be surprised at all. If it goes to the upside, I won't be surprised at all. I mean, to me, both sides and both decisions really make sense, and God knows what the decision will be. Alright, so that's exactly what I'm thinking right now. I just don't freaking know. I've got bullish bias and lots of elements suggesting we should go to the upside, but I also have some balanced elements suggesting we could do and go to the downside as well. And try to make a nasty reversal to go stop hunting. It's not going to change my long-term bias, just it could be a short-term trap because lacking of good news or anything like that. I don't really try to understand the why in here. All I freaking care about is for the market to pick a freaking decision, and the longer we spend in here, the less confidence I have. It's just a matter of timing right now. You just don't know. At some point, for God knows what reason, the market will accelerate up or down, and it will pick a decision. It can be noisy, which means if you say, okay, I'm just going to wait for the market to start heading in one direction, let me tell you something. Can you count down how many fucking weeks we've been making back then? What makes you believe that just heading into some direction is going to be the right one? Alright? Are we clear on that? It's not because the market just starts going somewhere that it will obviously mean that we're heading in the right direction, the one we're going to keep on going with. It's obviously not. So where do you have a clear and clean decision about what the market will pick as a decision? Here or here. So where do you take your decisions if we go here or here? So whatever the fuck happens in between, you do nothing. To me, it's pure and simple. We go there, stop loss. We go there, stop at break even, and I'll let it go with the trade. And if you don't like that, you still have option number 3. You get the hell out right now. Basically, you got in, you got out, you go out, same price, and you just don't play that game. But obviously, that's a choice, okay? In here, you have to assess that why am I still holding that trade? Doesn't mean that decision has to be shared by everyone. I very well understand if some of you guys just want to get out. For what reason? Because if it goes to the upside, remember that we still have, or you probably still have, the buy and hold. Which means if it goes up, you're going to take some gain. You're going to take some money out of this. If it goes down, then you're going to lose a little bit. But normally, in the long run, it shouldn't change anything to your plan. So, basically, if you're out of the speculative trade, if it goes right, you're still in. If it goes wrong, no problem. So, you're still fine. If you maintain the speculative entry, what does that do? What is it actually doing? So, it's adding some gains to the actual position, to the actual long-term trend, okay? Which means to me, in the long run, I'm not going to take that money off the table unless until 2 years from now. So the buy and hold, I'm not going to profit from this until 2 years. So I want to make in-between profits. This is why I clearly separate the two scenarios in my head. And the speculative scenario is in jitter right now. It's in jeopardy. It's just waiting for validation. Okay? But why am I holding this one? Because I clearly said we're in a 50-50 odds to validate the trade or invalidate, and really at that stage, no one in Earth can tell you which side we're going to go, because simply it's the hardest ever. All right? And we're purely neutralizing everything in here to just have a neutral bias. But why am I holding this? Because I know how much it cost me if I go there. Really, not a big loss. I'm just going to take a 2% loss of my capital, which is nearly nothing, and I don't really give a shit about that. If we go there, it's a 2% gain. But am I going to profit take in here? Absolutely not. I told you where I want to profit take, and this is where I want to profit take. I'm going to go 4-hour chart because this is a lot clearer. This is the area in which I'm going to profit take, 240, 250, which means in an actual money management perspective, all right, this is costing me 1,000, all right? This means 1,000. We go there, I stop loss 1,000. Fuck it. It means I need candle closes, so I may be triggering the stop loss a little bit lower. I mean, if the candlestick is really sharply going down, I'll wait for the candle close, which means I may trigger the stop loss lower. So let's say 2.5%. Okay, so 1,500 approximately, facing the icon sizing. So if we go there, all right, do this, that's hell of a loss, all right, but if we go there, I mean, how much does that brings? Simple as that. Take that as a risk-reward ratio. I'm basically risking 1 to get 4 in return. So does that really change something? The answer is freaking fucking yes. Because if I tell you, okay, now let's throw a coin. Face you win, opposite side I win, alright? In here you'd say, what's the point of that freaking game? It's just as stupid as ever. Why the fuck would you even throw a coin? Now I add another rule on top of that. If I win, you give me €5. You give me €4. If you win, I'll give you €1. Do you want to play that fucking game? Obviously you won't. And I will like to play that game as long as it's offered to me. So definitely yes, I'm taking that trade because they have a freaking decent risk-reward ratio. But obviously, those who are targeting just to take the profits in here, you just don't take that trade because you're risking as much as you could lose. You're risking as much as you could win. It makes absolutely no sense in that perspective. The only thing that makes me holding that trade is the fact that to the same amount, for the same odds of success or failing, I'll have 4 times the loss I could take. That also means that in that perspective, it also fuels the probability to go chasing stop losses because it means a lot of people will just do as well as I do. Mean a lot of people are probably bullish biased and bullish speculating on that market, and their stop loss will be closer than the profit taking. Which means if we have some stop hunters in here, and that's what the freaking pattern on the daily chart may suggest, if we have some nasty speculators in here, market makers, whatever the shit, if they decide they're ready to put the money, to put the price down, to just take down stop losses and buy the losses, then they could very well do it. So be aware of that. There is that underlying risk. If you are going to be hunted down by some market maker, yes, it's nasty. Yes, not cool. They're going to pick your money. Oh gosh, does that really give a shit? They're going to take your money this time, but all we care about is you take more money the next time, and that's how it is. All right? I really need to understand that. It's really important. If we go down, surrendering the gains doesn't mean that you've been fooled and that's awful that we let some people do this, because I know some of you may think it that way, that the market makers are really nasty persons. They picking my money and they're stealing from me. Yes, they do. And does that really change anything? You don't have to be mad at that. You just let it go. That's how it works. You play by the rules. The guys are stronger than you. They fucked you up. You know what? Clap, clap. and go again next time to pick some money. It's simple as that, okay? You're not fighting the market. Always remember that you need to play by the rules. We don't know. I see some shadows in here. We'll see if those shadows are validating or not. I just need to balance a little bit more my perception of the market because of those upcoming shadows. Anyway, that's too long, 20 minutes freaking talking about that. But I really think it's absolutely necessary that you guys get to the actual decision-making process in here and understanding why I'm maintaining that position, even though I'm lowering my probabilities to see this one validating. That being said, moving on. So, gold and silver, nothing interesting in here. Gold still playing sideways. GBP is doing pretty well. GBP is finally invalidating that bearish signal, so that's a good sign. We're closing. The candle is not yet closed, but if it closes like that today, it's going to be a good sign because we're basically fucking up bearish signal, which means the bulls are rising strength. Does that really mean that we're going to go straight line to the resistances? I don't know yet, and this hesitation structure might not necessarily be at play right now. I would say until further notice, I just do nothing. I've been playing that scenario for a long time, been waiting for a long time. Now that it's providing some gains and leverage gains, I'm not gonna reverse just like that or profit take at the first resistance. So I just let it go and waiting for further informations. For now, we're fucking up the bearish signals, which is a good sign. Well, I'm going to see how far we can manage to go until actually finding some bearish reaction. So for now, it's just kind of a wait-and-see approach. If we can reach out to that resistance, that's good. And in that perspective, obviously in here, I'll do some money management, but just not right now. I'm waiting for further information. This one was a concern, and I said if we break down supports, I'll be concerned about that. We didn't. We're breaking the resistance. Good sign. I just let it go. USD yen, I just let it go as well. Those one I don't freaking care. NZD yen is going to enter a portfolio pretty soon. It's been reactivating, so right now if we fall, obviously I'm breakdown trading, and if we go to the next resistance, I'm obviously looking at speculative entries. But for now, oh god damn it, I haven't seen that. But normally, yes, we should do another drop in here. We should try to do so. We'll see if we do. If we don't, then problems. Means the NZD really is as strong as it could be, but there is a speculative trade to try out there. We'll see what the future will bring us. For now, it's wait and see. CAD yen's been working just fine. We're trying to rebound out of yesterday because the yen is kind of trying to reverse yesterday's trade, but I'm not really worried. We clearly have the bearish bias setting itself, so we can just work ourselves out there for a little bit more. But I suggest at some point, just as ends in the yen, we're going to have a strong yen, stronger than every other currency. And obviously CAD yen as well should go to the downside. USD CNH and MXN are doing fine, and freaking AUDNZD isn't. So this is the harder than ever. So we're gonna go intraday in here as well. I'm gonna 2 hour. I bet no 4 hour is definitely the chart I want to talk about. So this is what we have and what we're facing in here after that strong compression, that stupid bearish extraction. Low liquidity during the overyear session, and now we're having this. I mean, after compressing, we have more than enough bullish momentum to fuck up that trend and just reverse. I mean, range, bearish trend, range, reversal, bullish trend. That's what's obvious, but the thing is that what the hell are we doing in here? Now we're doing expanded structures or we shouldn't do that. So it's another range, another hesitation. But this time, instead of compressing, we're expanding, which means volatility is rising, tension is rising out of that support area, and that don't like that. We shouldn't be freaking setting ourselves in those price area. We shouldn't stay there, and we do, which is not really according to the plan. But playing timing is the worst thing you should do. So I don't like that timing. But I have to accept that. I don't manage timing. So we're still trading acceptable prices and acceptable price structures, but I don't want that to last too long. I really want this to validate so I can cool down and get out of the fear area, because we're still right in there. So it means in here I'm balanced. I don't know if this market really is bullish, bearish. I don't know. It's a range structure. I really would like those range to terminate and finally have some bullish bias so I can rest. But you know how it is. I mean, I'm not making that freaking market, so I'm not the one who picks the decisions. And to be honest, I would like, obviously, to see that market reactivating bullish, but I still don't know if it's going to be the case. The problem is I still have strong leverage in here, which means if it goes down, I'm obviously taking a loss that I'm not going to like taking, but I will have to take anyway. So for now, no problem with that. I'm not invalidating anything. I'm not buying anything either. I'm just waiting for freaking something to happen. But to be honest, in a technical perspective, in here we've been triggering stop loss hunting pattern. So it's a stop hunting, stop hunting, stop hunting. So basically this market is just feeding out of stops, which is the worst case scenario, because it means the market itself doesn't really know where to fucking go. So I'm just going to wait for this to terminate its game. I'm not really concerned about yesterday's strong pullback. And to be final, to make a final assessment in here, I'm just going to do this, all right? Just have a look at that. 3 weeks in a row, we've been both breaking the lows and the highs of the previous weeks. And we always managed to close in between. So we've never managed to close outside of the previous week's shadows. So we'll see how it goes. I tend to believe this week we'll do just as well, which means we're probably in here finding a strong bottom. But am I going to buy? Obviously fucking no, because that will be too dangerous. I'm already nearly crossing the red line in terms of leverage, so I'm clearly not going to put additional money in that game. Just going to wait as well for the market to pick a decision. Hopefully it's going to be the right side. If it isn't, then I'll have to trigger a nasty stop loss, the one I don't like to take, because this one is probably going to cost me approximately 7 or 8% loss, and I really hate those losses. But still, generally once in a year, I freaking manage to take that kind of stop loss, because that's how it is. I'm no perfect. I'm taking huge losses sometime, but when I say huge loss, I mean literally 8%. It's not that much. I mean, if you look at the gains I'm making, 8% is not a big drawdown. Facing the returns, all right? So for someone who's making 15% a year return, obviously 8% is hell of a drawdown, and you cannot accept such things. But when you're making 100% a year, 8% is just basically shit. I don't really give a that. I don't really care about those losses. I just don't like taking them. But obviously, it still happens at some time. So we'll see about that. I'm taking risk on the AUDNZD, I know, and I'm aware about that. And to be clearly honest, the 8% loss I could be taking out there is just 8% gain I previously taken as well. So it's just I'm going to give away money I took from the market, and I would like to take more money, but at some point I'm just going to be wrong, like everyone. I'm failing at some point. So we'll see, future will tell, but at some point acting is not really an option to me, so it's just wait and see. And it might be just today's big, I'm going to put today's show as an educational content, because clearly today what we're having is really a big lesson that so many people made years to really get to these actual conclusions, that at some point, even if that's painful to wait, then waiting is just the freaking only choice you have. I could press the exit button. I could just say, okay, you know what, I give up, fuck it. I'm not going to wait for AUDNZD to take my stop loss. I'm exiting just right now. I could say the same thing for Ethereum. I could say, no way, I'm getting out. This thing doesn't really is interesting. This thing isn't interesting. I'm just getting the hell out. Well, history has told me something. When you do this, you just do no trading. You're doing guessing, and guessing shouldn't be a single part of trading. Trading is applying a fucking strategy, and timing is a bitch. So timing is what's going to force you to change your plans. And obviously when you're beginning, you're going to change your fucking plan each and every time, because timing puts a pressure on you. It's going to bring up some stress, and stress is going to force you to take irrational decisions. I think the most rational decision in here is to fucking wait. And really it takes a lot to really learn that lesson, and I bet some of you guys will have to make the mistakes before really getting to the actual conclusion, but I hope some of you will just get it like that. Waiting is generally the best answer when you don't know. That's it. So let's get to intraday trades now and to finish today's show, because that's actually the case. So we're going to apply the intraday strategy, pure and simple, and here we're going to go daily chart on the SPX, looking at the price, cash market price structure, see if there are some gaps or things like that to fill in the nearby area or not. So we had that tiny little gap in here that we managed to go filling. Yesterday, after an up gap and a bullish session, stupid as ever, as we had just something like the G20, and it really felt to me like the same thing. I really felt Friday was a G20. Reason why I've been selling at the close, fuck it. I took high level of risk, I told you, and I shared that after the close, so you guys couldn't be able to follow me. And what we've done is exactly what I was expecting. We've been gapping down and freaking breaking support down the road. The thing is that if we have a look at the session on a more shorter term time frame, we can clearly see that we've been opening, the gapping down, closing instantly at the lows for the first hour, so call that the IB range. So IB range has got in here, and what we've done is basically we've doubled it down, so we've extended IB range to the downside, and we've been holding the gap. So that's a bearish session. Clearly it is bearish gap, highest tick is the high of the day, maintaining the gap, extending the IB range to the downside clearly is a sign of trend. So if you think we're bullish trending, no, we're bearish trending right now. Oh, sorry, we're ranging or bearish trending, but we're no longer bullish trending. And the thing is that we probably found a market top. So what it says is that you can put stop losses in here safely because this area has been rejected. The second thing I will guess in here is that yes, we terminated a trend in here, probably. It's a lower high, and we've made lower lows. So probably, we're just going to keep on reactivating the main trend. So I still tend to believe that odds of that range is to probably exit from the downside. But first, we are going to fucking range. So expect us to do something like that. We're not necessarily going to reverse in a straight line like we did before, because that reactivation in here suggests we're not going to replay what we've done last time, falling like a cliff. We're just going to range a bit and then falling off the cliff. All right, that's what I suggest at the current time. Kind of a range. We're probably going to maintain the gap. I don't nearly think that we're going to close this, or we're going to just try closing it and then falling apart. So I would say here is a perfect area for a stop loss. 26.70 is where I'm going to put my intraday stop losses. Now let's go intraday, 15-minute charts. That's what we do. All right. Let's pick up a plan for this afternoon to me, or morning eventually to you, depending where you are around that fucking globe. So this is where I said we're going to put the stop losses, okay, 26.70. So to me it's going to be there. Previous market top is great. That resistance, we've got stop hunting pattern in here, so you can safely put your stop losses out there. So 26.66 on a future market pricing. And that's how it is to me. What the hell's that? So I'm just going to maintain this. We don't give a shit. So really sounds like a 1, 2, 3, 4, 5 impulse. So definitely first bearish impulse to me. So yes, stop loss can be set near those prices. Not exactly in here, but I would say if we handle candle closes in here, that could be problematic. Doesn't mean you put stop loss at the market in here. Just this is the price. You invalidate your scenarios. All right. So we apply range to kind of pullbacks. In those scenarios, generally, we tend to retrace between 61, which is in here, and 76.4% Fibonacci. So this is the area in an Elliott wave perspective in which we may generally, technically expect, statistically expect the prices to reverse. All right? Doesn't mean we're going to go there, but in just an Elliott wave structure pricing, this is where we typically reverse. Now we're looking at framework. Oh shit! Just how odd is that? For example, we've got the damn context showing up the exact same price area. So definitely this is where the things will be at play today. This is the area which all odds bring us down to. We've got that target, but it's been pretty mature already. Yes. Remember that targets must be filled gets invalidated after 40 to 50 candles. Simply meaning that this target doesn't mean anything anymore because we haven't filled this one in the appropriate time frame. So, but we've got this one, it's been managing just fine. Okay, so we pull back, target, trend support, and we're going up, which means for now the odds are this trend channel is our guide. We're uptrend channel and the market is trying to rebound, trying to reverse. So we're buying at the lows, selling at the highs for now, but we're still in a bullish trend channel. So short-term trend is bull, major trend is bearish, and we're probably going to sell that wave too. Okay, so we just let it go with the prices. As long as the trend channel is bullish, we see no way to change the plan. Just let it go. Do you see any bearish signal in here? Nothing. We've been reaching out in here. Fibonacci level, yes, kind of a tiny signal. The market is reversing, but I don't think we're going to sell in here. We could, but I'm not going to sell right now. Not enough to me. What's making shifting the balance in here? Take all the informations you have. This is your Googles, okay? The indicators are just translating things you don't see into something you clearly see. You just need to read those informations. What do you see in here? All right, that's a stop hunting target, and the market has been reversing just here, which means we should have gone bearish there. We didn't, and we decided to break through. So I would say this for now means that we're stop hunting and we're trying to retrace. So I would say bullish trend channel, stop hunting, feels like I'm not selling this. I want better signals. I'm not going to take just a gray signal, just an overload. All right? It's normal to overload when you stop hunt. So I would say the most favorable scenario in here is just to probably going to find some bulls in here and follow this trend channel and rebounce one more time. What I'm going to look for is to try reaching out this area. And I would like to do this with a divergence, a clear divergence, not just a tiny divergence like it is. I want to see the market slowing down, okay? The pace in here, for example, what I would like to see today is something like that. Ranging a bit in here, all right? And between the US session, a burst, getting into this area, getting into context, finding a nice 15-minute bearish signal, and selling that signal. This is what I'd like to see. Kind of a neutral day and profit taking near yesterday's low, because I don't think we're neither going to break previous day's highs or previous day's low. I think we're just going to trade in between today and finish the day like that. So don't forget to partial profit take on that 23.6 support area, because remember what we said today. We're probably going to wave 2. Wave 2 is just a range, but it's a range you need to have a bias into. You have a bearish bias, so we're favoring selling entries, but we still have to secure them. So I would say selling in here, you take what? 30% of the position in here, you take 30% off, you pay for the stop loss, and you just keep the 66 remaining percent on the swing scenario, and that's free leverage to bring into your swing scenario by just taking that intraday trades. So instead of forecasting intraday gains, I suggest today I'll take an intraday trades that I'm gonna bring up and bring in the swing scenario as an additional free leverage. I'm already leveraged one on the US, and I'm gonna probably add another layer of leverage today by an intraday trade. Okay, and we'll see how it goes. So that being said, future will tell, but this is exactly what I'm going to do today. I'm going to wait for further informations. Either we get to my target without filling my entry price, and I'm just going to do nothing, or they get into my selling area. As you can see, I already have the alert, and that's exactly how I'm going to trade today. And guess what? It's not going to take more than 3 minutes of actual working time today to do this job. First of all, I do freaking nothing. I made that analysis, but it wouldn't have taken more than 2 minutes doing it without explaining here and there. So I put this alert. So what's the actual trading job in that perspective? I make my analysis. Let's be honest, 2 minutes at best. In here, it would have taken to me. Though I get to the conclusion is I don't give a shit until we get to 26.52. So 26.52, I put an alert in here, and when the price goes there, it's going to ring the bell. I'm going to go in here, open my trading tab, looking at the prices, and do what? I'm going to set an alert. Okay, I'm going to do this. So let's focus on how my afternoon is going to play like. Okay, first, nothing until it rings a bell. This bell, I do nothing. No way, I will just have been fooled. Go there. Okay, so let's change that game. I could actually just delete that if I want to be more precise. I'm just going to do anytime we break this high with a candle close. Okay, so in here, add an alert, but this time candle closing. Okay, oh damn it, we can't do that. So I need to use this tool. Okay, so it's just going to be a random alert. All right, candle close. And by the end of the day, otherwise I don't freaking give a shit. Alright, so it's going to be, I want that to happen by the European close. So yes, that will be, fuck you. Yes, okay. So by the European close, and even more than that. So it was going to be this. I don't need necessarily SMS on this one, but I'm going to use it no matter what. All right. So this is how I'm going to do. Okay. We go there. I do nothing today. We break this one. Next step, I create a new alert, triggering for a signal. All right. Next alert is the trading signal I want to have. So got multiple choices in here. I'm going to do educational content. So first of the options, you can trigger the alerts on the confirmation signals. For those who are trading low risk, you don't give a shit about the actual aggressive trading signal. You're going to care about when the market prices reverse. So what you're going to do is that you're going to use framework, bear confirmation, and you're going to do this, greater than 0. You put this alert, basically, you will be alerted anytime a red triangle like that will show up. If you want this to be validated, use candle close. It's a higher level of risk management. Those who want to be a little bit more aggressive just will be alerted when the signal just show up. And remember that signals can show up and turn down, show up, turn down. And just you need to wait for the candle to actually close with the signal to make sure it's not going to unwind. As simple as that. So different level of risk depending on your risk assessment. The high level of risk kind of trader you will be, the more aggressive you'll be. If you're less aggressive, obviously better risk management, but you're going to have less. You're going to have worse prices. Right? Simple as that. Other option, okay, you don't use the bull confirmation, you'll be a little bit more aggressive, you're going to take the trade on the momentum signal. In that perspective, you're just going to be using the bear okay, which means you want to have a double bearish signal, and anytime the market crosses that level. So anytime it crosses, you're going to take the trade at the alert. Same thing goes in here, alert at the signals appearing, very early, but be aware that if you take the trade without the candle close, you're very aggressive because many times the signal may just disappear at the two final seconds of a candle. And if it just disappears 2 seconds off the close, then you're off as well because the signal just worth shit if it doesn't hold the close. So this is highest level of risk. You don't even wait for the candle to close, or you wait for the candle to close. Okay, so you can put that alert. I'm going to put this one as well because I care about this one. I want to be alerted of every bearish signal today on a 15-minute signal. So I would say yes until 8 p.m. in my local time frame. I want to be alerted of every 15-minute signal. Okay, and I want this at close. Okay, so I put that alert. So this is all I'm going to do. Now if you're thinking I'm going to close that video and just watch from a chart, and just look at that freaking chart forever looking at every candle, just like every candle matters, you really got it all wrong. I don't give a shit, and like I try to teach you guys, 90% of the time the candles and the price doesn't mean anything. So if you're looking at them, you're just looking at something that worth shit in terms of information. So what is going to come out of this? Two options. Either you're going to overtrade, which is the worst case scenario, or you're going to take bad decisions, you're going to lay doubts pouring into your scenarios, you're going to change your mind, you're going to be a switcher. So what does come out of looking candles that worth shit? Just other shit. So you don't do this. You don't look at your charts. This is why I've been setting alerts on every single thing on the indicators. This is the biggest ever thing that TradingView can bring to you, having server-side unlimited number of alerts. So obviously this is for the highest level of paid account, and I very well understand that not all of you guys can afford those. But anyway, even just a Pro Plus account is pretty much affordable. I mean, with the 30% reduction we gave you guys on Discord, it basically turns it down to $10 a month. That really, I mean, I don't know how much you play with, but just to be really honest, $10 fucking a month, how many does a stupid mistake like overtrading and switching does actually cost you a month? I bet it costs you more than 10 bucks. So if you want to learn trading, I suggest you use good tools. I mean, alert system is definitely something you need to have today. In nowadays trading, it's absolutely necessary. Or you can use MT4 and pay for a VPN, but basically a private network is going to cost you 10 bucks a month as well. So I'm not... Let's be honest and let's be fully transparent here. I have absolutely no fucking partnership with TradingView. They don't pay me a fucking cent a month. I don't get any money doing this. I'm not promoting because I'm earning anything out of this. I'm just promoting because at some point I just think it helps you. All right, and whether you like TradingView or want to trade with another trading platform, I just think that server-side alerts, TradingViews or whatever shit else's solution you have is absolutely necessary if you want to get to a safe trading, because that's the only way to fight two of the biggest mistakes: overtrading, switching, and everything like that. Because looking at the charts generally makes you take a bad decision afterwards. So how do you fight that? You need to stop looking at the charts, but still you need to trade. What's the only solution available out there? Having someone or something looking at the charts for you. This is why we use indicators, and this is why we put fucking alerts on them. All right, this is more than enough for today, and obviously I'm going to add this one to the educational content playlist, because I give you guys pretty important tips today, and I hope you enjoyed that. That being said, I'm going to see you guys tomorrow, and to finish this, I'm going to talk about the PDF manual. I'm moving ahead with the French version, probably halfway through this one, and I hope I'm going to be able to finish this one by the end of that week, but I won't be there next week, as I said, which means I probably won't have time to translate that in English. So probably just February, early February, to get the English version, but this is... But this will come pretty soon, so it's just a matter of time. It's just next week off is going to change the timing, but you can be damn sure early February. No false promises. It's going to be out there, and I know you guys have been waiting for this one for quite some time, and I hope you'll like it. Bye, guys.